Welcome to the latest Motley Fool scoreboard. I'm on Chalk Balloon. We've got longtime fools Rick Menares and John Quast giving a 1 to 10 rating to a top 200 stock in the primary Hidden Gems database. It's Coca-Cola Consolidated, ticker symbol COKE. Rate the strength of Coca-Cola Consolidated's business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Rick's at a 7. John, you're at an 8.
Yes, I'm at an 8. I absolutely love this business. A lot of people don't realize that there's multiple Coca-Cola stocks on the market. This is not the mothership Coca-Cola. This is one of the bottlers of the Coca-Cola brand, and Coca-Cola doesn't want to do the bottling itself, so it outsources that to one of these companies, and this one is Coca-Cola Consolidated. It has some really good regional territories in kind of the southeast, but in other places as well. The reason I love this, look, I know we all say we're going to get healthier, that everyone's going to stop drinking all these sugary drinks, but after 100 years, I don't see that happening. It is the bottler of many Coca-Cola products. It's not the only thing that it does, though. It also has some contracts for Monster and some other beverages. So it has a broader portfolio that it is bottling and distributing to places like, the grocery stores and whatnot. So what is cool about this business is I don't see our consumption habits changing, but also the Coca-Cola company sells the regions to a company like this. And so it really has protection from outsiders coming in and stealing its business. So very strong.
Yeah, so Coca-Cola Consolidated isn't just a play on pop. The country's leading Coca-Cola bottler, serving 60 million thirsty consumers across 14 different states, also cranks out Monster Energy Drink, as John pointed out, Dasani bottled water, Powerade, BodyArmor, Topo Chico sparkling water, and Core Power protein shakes, and that's just one of hundreds of stuff it does. It's a surprisingly resilient business with 16 consecutive years of positive revenue growth. I went with a 7.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Rick's at an 8, John's at a 7.
I'm at a 7 here, and I don't dislike management, but management has confused me at times with what its priorities are. It was a net debt company for many, many years, and then it systematically paid down the debt to the point where it finally had a net cash position for the first time in decades, and it kind of celebrated this like, hey, we finally got here, and then it immediately went out and took out some more debt. So it just confused me what it's actually trying to do from a capital allocation point of view. That's my only ding here. Otherwise, I think it's done a great job.
Yeah, CEO J. Frank Harrison III is the great-grandson of J.B. Harrison, who founded Coca-Cola Consolidated more than 120 years ago. I guess you can say carbonated sugar water runs through his veins. He's been at the company since 1977, and he's been CEO for 30 years. He has a 69% CEO approval rating by employees at Glassdoor. That's not a great score, but this is a business where a lot of the entry-level jobs are low-paying warehousing, manufacturing, or distribution gigs, so I don't mark him down so much on that. I went with an 8.
For financials, a 10 is a fortress, a 1 is yikes. Both of you have 6s, John.
Yeah, my issue here isn't so much the business itself, but when you look at a bottling business like this, there are limits to how much you can grow because there's only so many territories out there. There's only so many beverages that are going to enter in your bottling plant production. So there's limits to growth. It's a high volume, low margin business, right? And so there are limits to how profitable this business can be. And then, as I mentioned earlier, it did go back to a net debt position. It is very, very manageable based on the profits that it has. However, I do like net cash personally, so I ranked it at a 6.
Yeah, I mentioned the 16 consecutive years of top-line growth, but I should add that revenue increases haven't cracked 12% in any of the last 8 years. Slow and steady wins the race here, but it's a slow-mo race. The balance sheet has $2.7 billion in debt, but it's more than manageable, less than 3 times its annual EBITDA. I went with a 6.
All right, Rick, let's talk valuation. How well will Coca-Cola Consolidated stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I went with just a 0% to 5% 5-year growth as a safety score of 8. I'm not a fan of the valuation. It trades at a higher earnings multiple than Coca-Cola itself. Given the nature of the business, its margins are also a lot lower. Its dividend yield of 0.5% is a fifth of Coca-Cola at 2.6%. The upside is more flat than sparkling. My safety score is going to be a lot better. Coca-Cola Consolidated has been around for 123 years. If you're outlasting some giant tortoises, you're going to get a high safety score from me, 8.
Yeah, I'm a little bit higher here. Potential return 5 to 10%. This company never ceases to amaze me, the kind of shareholders returns that it can produce. Like you said, slow and steady wins the race. It does have some things that it can do, such as its dividends, such as share repurchases. So I think it can, in total shareholder return, get in that 5 to 10% long-term range. A safety score of 7. You know what? In hindsight, I probably would have ranked it a little bit higher, but I think it's a very safe business overall, but maybe not the most invincible thing out there.
Thank you both John and to Rick. They've given Coca-Cola Consolidated an all right overall score of 6.5 out of 10. For Toppets, John prefers Pepsi and Rick prefers the Coca-Cola we all think about. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, Fool on.